Hi there. Welcome back. This episode is going to talk about assets. Your business assets, meaning tools, computers, equipment, expensive furniture. Sometimes it means vehicles, it means machinery. If you're construction related, it can be this a tool chest that you go and buy a tool chest and you fill it full of tools and you spent $20,000. Well, that's something we want to break down into asset, have it in there, and do some special bonus depreciation and give you maybe a few years of extra depreciation. And we'll get into just a second. I'll describe what that really means. But so a small asset to someone like me who prepares taxes and does your bookkeeping is anywhere from $1,000 to $2,500. Anything smaller than that, it's just an expense, a supply, a material, whatever. It's nothing for me to need to know much about, other than to make sure we put it in one of those categories and don't try to put it in your owner's draw when it shouldn't be. Owner's draw meaning the owner took money and they're going to pay tax on that money. So if it's a office supply, we're going to call it an office supply. If you bought, like for instance, yesterday I had to order a couple printers, or a couple of days ago. My office, I think my office must have took in a power surge and it took out one of my printers. And we're getting into tax season in a couple of weeks, and I need printers that are going to work their little hearts out and not give me any trouble. So I had one printer already on its way. I buy these little throwaway laser printers, so I pretty much expect once a year I'm going to have to buy a couple printers. So it was time. But the point is, the second one that I bought this time, I upgraded. I went up a grade, hoping it'd last a little longer and could put out a little better quantity and quality. So that being said, that day I'm online ordering about $800 worth of printers and toners and everything else. So yeah, I'm going to take that receipt and I'm going to add it to my list of assets for my insurance company to know about, and for me to add to my office equipment to depreciate. Okay, so small, but that 800 is close. I'm going to lump the two printers together. It was $1,000. We're going to just write it. We're going to put that in for one asset. I'm not going to worry about it. We can make those small adjustments as little potatoes. Nobody really cares as long as you're not putting in a receipt you didn't actually do. So that being said, if you bought a Skytrack and it was $30,000, we want to do some bonus depreciation and we want to do some regular depreciation to cut your tax, because depreciation cuts your tax and it can usually cut it for more than 1 year. So, but the bonus kind of gives you a little extra of it, and then you just take the rest over the life of the expected IRS stated life expectancy. And they have different rules of what it can be. You can't decide how many years you're going to do it at. You have to take the rule. They've limited a lot of that. It used to be you could kind of, yeah, okay, it was used, we're going to do 3 years, and that one was newer, we're going to do 5 years. No, IRS says if it's this number of years. If it's this number of years. Vehicles are 5, equipment is 10, rental homes are 29 and a half, and your house is, I think, well, you can't really depreciate your house, but, and you have to take land off a home, and land can never be depreciated. They have all the rules. We don't get to decide those. We just have to follow them. So a large asset is anything over $2,500. So we definitely need all that information. You need to have a purchase, a receipt, a bill of sale. If it's a vehicle, an RD 108 from the dealership. In Michigan, it's an RD 108. The form that tells you all the details of how much it was, how much was sales tax, how much was financing cost, how much your interest rate's going to be, who the lender is, what the payment is, how much you put down, what was your trade-in, what did you trade in, so we know what if you traded something in, we can take that off your asset list. And hopefully you didn't trade something in that you'd only had a year or so, and we don't have to recoup that depreciation, because you do have to do that. If you traded in too soon and you took some bonus, you got to pay it back. You can't just keep that. So it's not enough to worry about. Don't try to fake that. Just go with it. It's not that big of a deal. So your person who's doing your books and your taxes needs to know, when you buy an asset, what kind of asset, what was it, year, make, model, was it used, was it new, who'd you buy it from, did you finance it, where did you finance it, did you lease it? Leasing is a very different thing than buying. When you buy with a loan, you don't get to write off the loan payments. You get to write off the interest on the loans only because you're taking the whole amount of the asset and depreciating it. That's where you get that, not when you make the payments. You only get to count the interest because that's over and above what you bought it for. That's why. So if you're leasing, everything's a write-off. The whole payment, everything you do to it, the insurance, everything's a write-off. When you own it and you're buying it with a loan, the loan payments don't count, just the interest. But you get to depreciate it, so that's where you get to count it. And it's over a period of time, unless you, well, in now 2023, most things can only have the bonus depreciation of up to 80%. So no more 100%. You just can't do it, not on a per item. They want you to be able to depreciate it over time. So we're going to do it that way. We're going to go with the rules. Make sure you keep copies. Take a picture of it, text it to your tax person, email it to your tax person, make a copy, bring it into them, whatever you got to do. Get it into them. They need it. It's important. Don't lose it. And it, they'll save it for you usually in the file with your year's paperwork. So make sure you turn that in. It's important. It can be very crucial to you to be able to take those deductions. So thank you